Right, before we get into price action trading and price action formations and candle patterns and how to trade price action and what price action trading actually is, I just want to cover what a candle actually is and what it actually represents. A lot of people will look at candles in a lot of different ways. So what I'm going to do, I'm going to break a candle down in as much possible detail for you. So what you're actually looking at, all these candles on this chart at the moment, okay, is what we know as Japanese candlesticks. This is the most common formally traded candlestick in retail trading. And when I say retail trading, I mean guys that trade from home. Retails and institutions will use what we call a line chart. So this is a line chart where it just looks like mountains, okay? And many professional traders, and this is actually my favorite candle, is actually a bar. So I actually mainly trade bar candles. I use a lot of Japanese candlesticks for my videos because a lot of people can represent to a candle a lot better than they can a bar chart because they don't really know what a bar chart actually is. So what I'm going to do, I'm going to draw a little diagram and explain to you exactly what a candle is. So a candle on a Forex chart will always start its life off as that is what we call a newborn candle. It just looks like a little line because it has not moved bullish, it has not moved bearish. And when I say bullish, I mean up, bearish, down. And we're going to get to talking about the bulls and the bears, the buyers and the sellers a bit later on. So what a candle can do, it can move up and down, but whichever way it moves first, it will always leave like a trail. So you end up with like what looks like a wick. Okay, and then you'd get a close. So when the candle closes, the bar on the right hand side will close like this. So just for another example, you get an open, you get a low, a high, and then you get a close. And this is exactly what a line chart is. So you've got the open, you've got a high of a candle, you've got the close of a candle, and you've actually got the low of a candle. And many brokers will know these as OHLC candles, open, high, low, close. So you can actually see on our data window, you've got the open, the high, the low, and the close. So what this actually is when you highlight a candle, it's giving you all the parameters. It's telling you the open price, the high price, the low price, and the close price. And this is really important information. And I will show you how we can read that to our advantage later on. So just to cover for a third time, you have an open, a high and a low, and then you have a close. So what is a Japanese candlestick? Well, a Japanese candlestick is just the middle filled in. So in this case, this will be a green candle or whatever color you set your balls to be, because literally the open and the close, so you can see here that the close is actually higher than the open. Yeah, so the close is higher than the open, i.e. in this case it would be a blue candle, but on many charts it would be a green candle. So if the close was to close lower than the open, what would that mean? So we've got the open, we've got a high and a low, and we've got a close. So we'll put it in Japanese candlestick form. It would be red, or in this case, it would still be red. Yeah, you can change the colors, whichever you want. So there's your open. Let me just put a little arrow on that. So you've got your open price, you've got your close price, and then you've got your high and your low. And that is a real easy breakdown on what candles actually is. Like I say, we will cover Rankos, Heikinashis, point and figure, all the different variations of candles. But at the moment, the only two important ones you need to know would be either a bar or a Japanese candlestick. So what I'm actually going to do, I'm just going to default this chart back to Japanese candlesticks. There you are. So I've got white for bullish, red for bearish. So I'm just going to zoom in on this chart for you, and I'm just going to show you exactly what the candles are. So you can see that the candles closed here, opened, then the candle has closed higher than the open, so it's bullish, then it's closed higher than the open, higher than the open. You can see, but this candle here, the red one, is actually closed lower than the open. So there, look, you got higher than the open, then this one's closed lower than the open. This is a bit of an indecision, but we've still closed lower, slightly higher, and then we've gone higher again. So you can actually join all the candles together, and this is exactly how a line chart is formed. It's actually drawn on the closes of price. So as the prices close, you're getting like a smoothed out line, and that is exactly what a line figure is. So just to cover everything, guys, you've got 4 points to a candle: a high, a low, an open, and a close. So what I really want to show you as well, just a bit more advanced stuff, is you would always mark a candle's high and a candle's low. So what I'm going to do, I'm going to mark a candle's high and a candle's low, and you can see that that is a container of price. So anything that closes within this candle's container, i.e. these next 3 candles, isn't technically bullish nor bearish because it hasn't made any new ground. So you can see here, right, this candle here that's closed higher than this previous price container is actually a very, very bullish candle because it's actually broke out of the area. Or if we was going to choose this candle's high and this candle's low, you can see that this candle here, okay, is also very bullish compared to this area of price because it's broken out and closed above the price container. But we will be covering price containers in our price action trading section where we're going to be looking for breakouts on individual candles.